Ladies and gentlemen, good day and welcome to the Q3 FY2024 earnings conference call of JTL Industries Limited, hosted by Nuvama Institutional Equities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Neha Talreja from Nuvama Institutional Equities. Thank you, and over to you, ma'am.
Thanks, Michelle. Good evening, all. On behalf of Nuvama Wealth Management, we welcome you all to the JTL Industries Q3 FY24 conference call. We are joined today by the senior management of JTL Industries, represented by Mr. Atul Garg, CFO, Mr. Pranav Singla, Whole-Time Director, Mr. Dhruv Singla, Whole-Time Director. We will now start with the opening remarks by the management, followed by the Q&A. I would like to first hand over the call to Mr. Pranav Singla for his brief opening remarks. Over to you, Pranav.
Thanks, Neha. Thanks, Nuvama, for hosting our quarterly earnings call. Good afternoon, everybody. Thank you for joining us today for this conference call. We welcome you all for our Q3 FY24 earnings call. Let's begin the call with a brief overview about the company. With a rich history over 3 decades, we have evolved into a fast-growing steel tube manufacturing company. We specialize in producing a diverse range of products, including ERW black steel tubes and pre-galvanized and galvanized pipes, large diameter steel tubes and pipes, solar structures, and hollow structures. We operate through 4 manufacturing facilities located in Punjab, Maharashtra, and Chhattisgarh, out of which 2 facilities are in Punjab. As a total group capacity, we stand at a capacity of 5,86,000 metric tons. All our plants have a capacity to produce the VAP product, which is the galvanized pipe under our radar right now, which gives us access to strength and finishing of products. Additionally, our Chhattisgarh plant is backward integrated and offers us cost synergies and facilitating the procurement of raw materials at competitive prices. At JTL, we have 10 registered brands offering cumulative of 1,000 plus SKUs. These products find applications across diverse industries such as construction, port infrastructure, heavy vehicles, water distribution, energy, and many more. With a network of over 1,000 dealers and distributors, we effectively serve the entire nation and extend our reach to international markets spanning over 20 countries across 5 continents. Our export primarily consists of GI pipes, constituting to approximately 90% of the export mix, assisting us to earn high revenues and margins. Moreover, we hold the prestigious recognition as a star export house by the Government of India. I'll give you a brief about the financial performance. Regarding our business performance, we experienced a robust demand for our products, resulting in a noteworthy 76% increase in sales volume to 1,905 metric tons in quarter 3 FY24 compared to quarter 23 FY24. On the broader perspective, our 9 months sales volume grew by 62%, reaching to a total of 2,10,933 metric tons on a YOY basis, which also surpassed our FY23 sales volume of 2,40,000 metric tons. Furthermore, our sale in the value-added product category witnessed a notable increase, growing by 46% from 54,000 metric tons 9 months in last financial year to 81,000 metric tons in 9 months FY24. Our revenue grew by 65% to 5,674 million in quarter 3 FY24 and by 46% to 15,743 million in 9 months FY24. This was led by the increase in demand of our product. Our EBITDA grew by 46% to rupees 429 million in quarter 3 FY24 and by 50% to 1154 million in 9 months FY24, led by increase in scale of operations. However, in Q3 FY24, our EBITDA margins decreased, led by decline in sales of VAP products due to scheduled maintenance of our galvanizing pot. This is a periodic measure taken by us to maintain our product quality and standards. For FY24, we expect our revenue to increase by 35% from FY23, and EBITDA margins shall remain in upper trajectory of what you will witness in this year. On the industry front, we expect the demand of structural steel tubes to remain strong for the next few years, surging by approximately 12-13%, backed by robust infrastructure demand pushed by the government towards construction, oil and gas, and water supply. Going forward to seize the forthcoming opportunities, we are targeting to reach a total manufacturing capacity of 1 million tons by FY25. Moreover, to enhance our manufacturing capabilities, we have plans to implement DFT at our Mangaon facilities by this quarter itself, which will be to a tune of 1 lakh metric tons. This initiative will not only enhance our capacity utilization and manufacturing efficiency, but will also open doors to new geographical markets. This will also increase our SKUs by the range of 500 as well. Right now, the SKUs we stand at around 1,000, and post the installment of DFT, we should be standing at 600 SKUs. Simultaneously, we are strategically outlining a significant capacity expansion initiative in our Maharashtra through our subsidiary, JTL Tubes Limited, which will further elevate our manufacturing capability, allowing us to broaden our product portfolio and offer an array of products under one roof. Through this capital expenditure, we aim to incorporate additional DFT lines, expand the capability to manufacture galvanized steel tubes and pipes, introduce a range of color-coded products, and implement backward integration in a facility which will facilitate the production of pre-galvanized sheets. In order to meet the desired target, we have proposed to raise a total of 1,310 crores through various means. Of this fundraise, we will raise rupees 810 crores via fully convertible warrants on preferential basis through promoter and non-promoter category. The remaining 500 crores shall be discussed through QIP route. Post completion of expansion, our KP of VAP products will increase, which will further increase our EBITDA per ton as well. Handing over back to Sneha.
Sir, should we open the floor for the Q&A session?
Sure.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask questions may please press star and 1 on their touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take the first question from the line of Amit Dixit from ICICI Securities. Please go ahead.
Yeah, hi. Good evening, everyone, and thanks for the opportunity. I have a couple of questions. The first one is around EBITDA per ton, which has come off slightly compared to the last quarter. While in your prepared remarks, you indicated that this was primarily due to lower proportion of value-added sales, mainly because of maintenance activity. Just wanted to understand, did you also see in the last quarter some amount of destocking because of anticipated fall in steel prices? Some of your peers have indicated that. If so, has this destocking ended, and are we likely to see a higher growth in sales volume in the coming quarter?
Yeah, hi, Amitji. Thank you for your question. Here, I would like to say that we have witnessed in this quarter our highest ever sales volume of about 1,01,000 tons. And this was, we didn't face any destocking criteria from the stockist because we are present in both the markets, primary and secondary. So we have a good opportunity to push our material in either of the markets when the other market is not performing better. Yes, there were certain problems in the primary market due to channel destocking and the prices being corrected over a period of months in the last quarter. But all in all, we've witnessed that we were able to push out more material than the previous quarters in the previous year as well. Herein, one key factor I would like to mention for slight correction in EBITDA per ton is due to the change in our value-added product kitty. So since we were able to achieve a higher number of volume, our value-added product due to maintenance schedule and was affected, and also since we were able to push out more quantities, our value-added product did not increase in that fashion. So therein we had certain correction in the overall beta per ton levels, which was not very substantial, but yes, it was present.
Also, Amitji, if you look at the value-added product tonnage, so we have a net tonnage increase over the past year, over the past quarter 3, financial year 23 as well. Last year in quarter 3, our VAP product was to the tune of 14,000 metric tons. But this quarter, our VAP was around 19,800 metric tons. So quantum-wise, it has increased. But as the company is growing and expanding their SKUs and gathering the markets in the black market as well, so that's why the percentage-based manner, the percentage seems low. And if you look at the 9 months EBITDA per ton as well, so that's somewhere in tune to the last year itself. Last year, our EBITDA per ton of 9 months were around somewhere 4,782, and this year we are close to 4,500. So the exact picture of a company's performance doesn't depend on EBITDA per ton of a quarter. It's more accurate to predict the picture of the full year or half yearly. That's a better way to look at the picture. Every quarter, the dip and rise of EBITDA per ton is very natural and can happen.
Yeah, thanks for the elaborate answer. Absolutely appreciate that. The second question is on the expansion plan. So just wanted to understand if you could, first of all, let us know, you have indicated 4 buckets, that is additional DFT line, galv, steel tubes and pipes, color-coated and, the backward integration. If you could break your capex into these 4 buckets, and also if you could also highlight some of the milestones that which capacity would be commissioned, when each capacity would be commissioned, so that we get an idea of the, of the overall capex plan, the track of the overall capex plan.
So, as we mentioned before as well, our entire capex for the first million ton will be completed before FY25. So we are well on track for that. As we mentioned in the last Concall as well, that we are expected to receive a DFT this quarter, and apart from that, a lakh tons of additional machinery facility as well. So that is well in track and should be happening this quarter itself. And the production will start to flow for the same in the next quarter of the financial year as well. And if you talk about the other capacity expansions, which is the DFT, which is supposed to come next year as well, and apart from that, a lakh tons of machinery again in Maharashtra to complete 1 million tons, that's well in track, and we shall be completing that before time. And to discuss about the next expansion that we've planned, so the company had already goals to reach a capacity of 2 million tons by FY28, FY29 before. But after the whole fundraise, the management, the promoters push of money as well, the game plan has changed. And we shall be receiving the capacity of 2 million tons by cut-shorting it by 2 years. So the entire capacity of 2 million tons shall be installed by FY27. By the end of 27, everything shall be installed, and the effective play of everything should be happening at FY28. So this is a broader picture. I can elaborate and tell you that how we're expanding and growing in our network.
Okay, sure. That's very helpful. I will get the details offline in the interest of time. Thank you and all the best.
Thank you.
Thank you. Thank you, Ajay.
The next question is from the line of Bhavin Pandey from Athena Investments. Please go ahead.
Hey, hi. I just wanted to understand the trend of our export volumes and just get a sense of why they have behaved the way they have behaved over on a comparison with last quarter as well as year.
Hello.
Hello. Yeah. Can you hear me, Pranav?
Yeah. So the export volumes didn't have a upper shift this quarter, as there was so much abundance, demand of the market, of the products in the domestic market itself. So the company was more focused on circulating the product in the domestic market itself. So net to net, we didn't have an increase in the domestic, in the export market, and we were well in line of the last year's numbers. The company has been focusing more on the domestic front more than the exports right now.
Okay.
Additionally, what has happened is since the last year, certain dynamics of exports have changed, especially in the last quarter. The problems of the Red Sea had arisen. Due to that, there was certain stoppages in export shipments. So we faced certain problems in receiving the allotment of containers. That is another reason of a slight dip in our exports of the last month.
Okay. So I'm assuming our export numbers should also be, I think, exhibiting higher growth in the period ahead because of the backlog we had this quarter. Is it safe to assume that?
Yeah, we are anticipating in the next quarter, since it's the first quarter for the rest of the world, and it's the last quarter for India, their financial. So everybody is in a positive, pushes the material in a positive manner from both the directions. We would anticipate that we should have certain growth in the next quarter.
Okay. And when we look at our 9-month numbers, our margins have sort of expanded very slightly. So is it all because of the efficiency enhancement in our production processes?
Yes, it's because of economies of scale as well. You can say that, and moreover, the company's production has, the production that we did last year has already been surpassed in 9 months. So there's some effective benefits that the company receives, and it's in that scenario itself.
Okay. And will we see, as more capacity comes in, our utilization improves, will we see more improvement as the scale improves?
We can expect that. The company is also working on max capacity right now. We are fully utilized right now, so it's very hard for me to produce more than this quantity given the capacity that I have right now. So one can say that time will tell how will the capacity expansion and the sector will play out.
Okay. And just last one thing, could you just help us with the Q-on-Q change in steel prices?
Sorry, can you come again with the question?
Could you help us with the change in steel prices for the quarter? How has the HRC prices behaved?
So, in the third quarter, as compared to the previous year, there was a good correction in the prices of HRC, and also the secondary market had a correction in prices, and the difference between the primary and the secondary also had increased in this particular quarter. But again, when, as I mentioned with the earlier question of Mr. Ahmed, that despite all this, we were able to push out more material because of our presence in both the markets and give a better quantity performance this quarter. Having been said that, there was a slight correction in the last quarter for HR coils as compared to the Q2 of this year, and certain destocking in the channels as well. This quarter 4, we see a upward correction in the prices happening. People are wanting to push out more material. The international prices have also corrected to the upward direction. So we believe in the coming months there should be a good demand and of steel and especially RW pipes.
Okay. Wonderful. That was really helpful. Thank you.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management will be able to Ladies and gentlemen, in order to ensure that the management will be able to address questions from all participants in the conference, please limit your questions to 1 or 2 per participant. Should you have a follow-up question, please rejoin the queue. Thank you. We'll take the next question from the line of CA Garvit Goyal from Invest Analytics. Please go ahead.
Hello. Am I audible?
Yes, sir. Please proceed.
Congrats for a good set of numbers. You mentioned we are present in primary market and secondary market both, and that led to improvement in our volumes as compared to our peers. So can you please put some color or give some more understanding on that? Are we using Patra as a raw material?
Yes, that's right. We use kelp as a raw material, so we are prevalent in both the markets, primary and secondary both. So in primary we use HRC, and in secondary we use kelp.
And
to add to that, Arvinji, we have divided our plants in such a manner that our production gets divided in this manner. Our plants located at Raipur and Mandi Govindgarh work on secondary market basis. Our plants located at Derabasi and Mangaon work on a primary market situation.
Understood. And you mentioned the gap between the primary steel and the secondary steel increased in this quarter. So that I think that helped you people to increase the volumes, right, on the secondary market side.
Yes. So the gap keeps on changing on a monthly basis, and at certain points of time, it helps us push the quantity in either of the markets.
And how the scenario will be in Q4? How do you look at it?
The gap is still prevalent, and we are anticipating that after the upward correction in the steel prices of HR coils, this gap would still remain as it was in the Q3 levels. So there should be a good demand in both the segments in the quarter 4.
Okay, got it. And you mentioned on your capex side, so you are mentioning about the DFT, you are mentioning about the GI backward integrations. So I think all these things, the entire new capex that you are targeting is towards the value-added products. Is that understanding correct?
To reach a capacity of 1 million tons from current 6 lakh tons, 2 lakh tons is towards value-added products of DFT, 2 lakh tons is of commercial black pipe production. Apart from that, from increasing the capacities from 1 million tons to 2 million tons, going for backward integration and forward integration, those all capacities will be increasing in the value-added segment. So, yes, our endeavor is to increase our majority of our capacities in the value-added segment to be able to achieve about 60% of our product profile from value-added.
Understood. And if we look at
the next expansion phase in the second million ton, the entire produce would be VAP. So that's something in favor as well. The entire produce from the second expansion would be VAP with higher margins.
Understood. And your current net block is around 100 CR, right? And capacity we are having around 6 lakhs. So can you help me to understand this 1300 CR is a huge amount. So how much of it is going to be exactly towards the increment of capacity, and how much of it is going to be towards the working capital needs?
So our gross block is not 100 right now. It's somewhere tuned to the run of 140. And if you talk about the gross block going ahead, like the capex happening, so the machineries will be somewhere around 850 crores for the second expansion. And so the entire gross block would stand around 1,200 crores or close to 1,200 crores. Yeah, and the company would be expecting a top line of 10,000 crores plus on that.
Understood. And you are saying this will be completed by the end of FY27. Is that understanding correct?
Exactly. So giving a quarter-wise breakup would be very hard because one really doesn't get to know as and when the machinery is ready and plan to arrive at the plant. But the broader picture is that everything shall be installed by FY27 end.
Understood. And how much time or how much time will it take to ramp up the things? Is there any estimation of that?
So it would take around 2-3 quarters to ramp up everything. And although the effective capacity production in the first quarter of FY28 should be significant bump as well.
Understood. And what is the overall volume target for FY24?
For FY24, we are well on track. So we, as we mentioned last time in the Concall as well, we are expecting a 30% growth over the H1. So we are well on track for that.
Understood. And in Q4, is it likely the realizations will improve because GI plant scheduled maintenance is over, and you are saying prices of the steel will also increase, so that will contribute to increase in realization?
Yes. As soon as if you talk about the EBITDA per ton, that might increase because our VAP share will be back on track above the level. But it's really hard to tell about the average realization of the products because it's totally dependent on the HRC and prices of the raw material in the secondary market.
Okay, understood, sir. Thank you very much, sir, and all the best for the future.
Thank you.
Thank you. The next question is from the line of Vikas Singh from Phillip Capital. Please go ahead.
Good evening, sir.
Good evening, Vikas.
Am I audible? Yeah.
Yes, Vikas.
Sir, my first question pertains to when we will be having our million ton capacity by FY25. What percentage of our coil would be in-house or backward integrated? And what percentage it would be at the 2 million ton by FY27?
Can you please come back to your question? It wasn't clear that much.
So, Mr. Vikas Singh's line has been disconnected. In the meanwhile, we'll move on to the next question, which is from the line of Aditya Velekar from Axis Securities. Please go ahead.
Yeah, thank you for the opportunity. It's good to hear, Pranav, that we are expanding and we will be reaching 2 million ton capacity by FY27. So just on that front, what will be our ballpark utilization for FY27, assuming that we reach 2 million ton by FY27?
So the effective utilization on the 2 million tons, it's very easy to give that year for FY28 50%, because that's very easy target to give. Obviously, we aim to increase it as soon as possible as the production capacity is installed. But as you know, the production takes up ramping up every quarter on quarter, so it's very easy to say that effective production of 2 million tons would be happening to 50% in FY28.
50% in FY28. Okay.
So,
okay. And what is your target internally for EBITDA per ton by that time? So if you can just throw some a large number, means not a very precise number, but your ballpark number, EBITDA per ton by FY27 and 28.
So we are expecting, as we closed last year, around 5,000 rupees EBITDA per ton. So our projection for FY28 is a 50% bump over that for the FY28 numbers. As a valuable product KT would be expanding, the number should be tuning to the range of that.
Understood. And on the capex scheduling, so when will our capex kick in to the max? From which year? Means for FY25, it's understood that our capex is on schedule. But for the next phase of expansion of 2 million ton, additional 1 million ton, what will be the capex profiling?
So it's already undergone process, which is happening to the fact that a part of machinery for the second million ton has also arrived in my Maharashtra unit. So the machinery is coming as and when, every quarter, every half yearly, and the effective installation of everything should be happening again, as I mentioned, by FY27 end.
Okay,
so it's a mix and match of machinery which is happening. The second million ton capacity is also coming well in time before that. So it's a mix of everything and coming as and when by the quarter and quarter.
So by end of FY27, we can assume majority of our 1,300 crore capex will be over.
Majority, the entire will be over.
Entire will be over. Okay. Lastly, from a demand perspective, means it's good that we are expanding and we have a demand visibility, but we can see that sometimes traders push back and there is a destocking in the system. So from that perspective, do you see that our demand visibility is there when we have an additional 1 million ton capacity? So effectively, when we have 2 million tons of capacity by FY27-28, at that time, because the competitors are also growing their capacity. So from that perspective, will there be any impact from demand side?
To answer that, I would simply say that we are not expanding our capacities in the size ranges or SKUs that we are currently producing. So currently, if we are producing a range from half inches to 10 inches, we are bringing in DFT structures, we are bringing in higher dia, higher size, higher thickness pipes. Then for supporting the forward backward integration, we are bringing in pre-galvanizing lines, and then venturing into CRM process as well. So our product, we are increasing our SKUs, our product line, our product profile. So we don't have to bag on only the present dealer network. We are able to expand the dealer network to the persons in the different market segment as well. So that is more of the motive behind the demand realization coming in the next 2 years. If we are only expanding in the commercial black type production, that would have entailed that we would be having such a problem, as you mentioned, of a demand being stagnant for our product. But since we are increasing SKU, increasing product profile, we hardly see that happening.
Understood. So our market creation efforts are happening parallelly. Whatever new SKUs we will produce, that market creation will happen for that also.
And correcting myself again, so the capacity that the utilization I mentioned for 28, apologies, that was for 27 itself. In 28, we shall be operating to the level 65% of the desired capacity. And not 50%. The 50% target was for FY27. And FY28, we shall be operating at 65% levels minimum.
27, 60% and 28?
No, in 28, 65% levels. And in FY27, 50% levels.
Understood. Perfect.
Yeah.
Thanks, Pranav. Yeah. Thank you.
Thank you. The next question is from the line of Onkar Gugadare from Shree Investments. Please go ahead.
Yeah, my question is regarding the EBITDA margin. Since you are mentioning that you will be reaching a capacity of 2 million tons in FY27 and utilizing around 1 million ton by FY27 and around 65% of 2 million by 28. So given the EBITDA margins which are currently standing at around 7.5%, and you are telling that EBITDA per ton would be around 7,500. So can we expect the margins to hit double digit by then?
Honestly, to give an exact picture about the margins is very hard because the net average realization keeps varying every quarter and every year, as we have seen in the past trend as well. But it's very safe to say that definitely we'll be entering double digits. But to give an exact number on the percentage is very hard. I can definitely give a close by number on EBITDA per ton, which I mentioned. But giving an exact percentage is very hard.
Yeah, but at least can we start assuming that you will be doing around low double-digit margins, EBITDA margins of 3-4 years down the line?
Yes, we can suppose that.
Okay, and since in that 2 million capacity, what is your ballpark estimate of exports and imports? Since I guess export will be a higher EBITDA margin business as compared to the domestic one.
No, it's nothing that varying in margins in exports and domestic sales, but I think right now we are operating at 10% of the total sales in export market. Going down the line, when we are reaching a capacity of 2 million tons, and on that clocking the 10% volume would be somewhere around 5x from what we are doing right now. So it's very safe for me to say that we will be in the 10% bracket for exports down the line as well.
So you don't expect any significant jump from export as a percentage?
So it can become 10 to 12 or 15%, but as I'm saying that the quantum in metric ton is increasing as well. So, and the demand is itself getting settled in the domestic market itself. So there's no stress about me exporting that much, and I rather sell in the domestic market.
Okay, the next question is on the whatever is currently going on is going right for the sector in terms of capex, government push, and everything. So in next 3-4 years, since you are bullish on the sector as well as in obviously on the company itself, what can go wrong with this?
So the major push that you're saying for 3-4 years, we are actually bullish for the next 3-4 decades. And if you talk about what can go wrong, probably the machinery getting delayed by a quarter, that's something that maybe I'm fearing, or more than that, there's nothing that I'm fearing right now.
You don't foresee any risk to the business, that means, apart from the delays in getting machinery, etc.
It's wrong to say, but in a scenario of pandemic as well, the sales picked up. So it's really hard to say that what bad can happen and what else can happen.
Okay, just one clarification. So, what kind of sales per ton total ton you would be doing by FY24? Around 4 lakh tons?
So in this year itself, as I mentioned, we'll be clocking 50% growth over H1. So if you calculate that, we'll be closing somewhere around 3.4-3.5 lakh tons.
Okay, and this 1,310 crore of expansion, this is only after 1 million. This is for 1 million to 2 million ton capacity expansion, right?
That's right. Right.
This has nothing to do with from 586 to 1 million.
That's right.
Okay, all right. Thank you.
Thank you.
Welcome.
We'll take the next question from the line of Vikas Singh from Phillip Capital. Please go ahead.
Good evening, sir. Sorry, I got dropped out. So my question remains the same, that currently, if I believe that we have roughly 160 KT of our own coil in 550 KT production, which is closer to 30% of the capacity. How this matrix is changing at a 1 million ton and 2 million ton of your capacity?
So, hi Vikas. Going down the line, we won't be expanding in the coil segment, and this will remain to this particular capacity itself. Whatever expansion that we're doing in the company is basically happening in HRC. Yeah, there's a part of it which is happening in the secondary market as well, but the majority of it's happening in HRC, so that it won't really help us expanding anything in this segment, as our major raw material would be HRC and not scales that we make at the Raipur facility.
Okay. So just related to this, when we are talking about the mega capacity and backward integration into that, we would be putting an HRC mill in there. So basically we would be buying slab and subsuming the margins of HRC rollout also in our product mix.
No, we won't be engaging in any of those activities. We won't be entering the segment of making HRC.
So what kind of backward integration then you were talking about in that 1 million ton the mega plant? You said that there would be a backward integration also. So if you could just give us
we're doing some forward-backward integration. The forward-backward integrations we meant is the product profile that we'll be increasing. Currently, what I'm making is mainly two products, the commercial black pipe and the value-added galvanized pipe. By doing a backward integration of making a pre-coated coil, I would be adding another SKU of pre-galvanized pipes into my segment. The same pre-galvanized coil can be used for a sheet manufacturing. And certain other specialty products. So this is the backward and forward integration that we're talking about.
Understood, sir. And sir, just one last thing. I don't know if any previous participant has asked. So our capacity, if you look at the industry capacity, it might go up by 3.5 million tons in the next 2 to 3 years. Do you expect the demand to catch up in the same pace, or there would be some dull period which we experience, which most of the people would experience? And how do you foresee the new product, that 1 million ton which you are expanding? as of now, given the market situation, what is the range of the product which we are going to introduce the EBITDA per ton in those range of product?
So to answer your thing in one simple way, so right now my sales mix is as such in which the government share is only 20%. And if I just sell to the government itself right now as well, I don't have enough capacity. Obviously, I have maintained my ecosystem in such a way that I have to serve the domestic market as well, export market as well, and the government as well. So I have a mix of everything, and I maintain that, and I want to maintain that in the future as well. But to answer your question in a simple way, like even if I just sell to the government as well, my capacity would be fully utilized. So the market is that strong and that bullish. And if you talk about some reforms that are happening everywhere in Maharashtra, especially the scaffoldings are used for construction activities. And right now there will be black pipes going down the line. The government, as we hear, is introducing to install galvanized pipes as they increase the life of the pipes. And anything that is happening in warehousing is just galvanized pipes itself as well, and bigger DFC structures, which segment we are entering. And more than expanding the current products, we are expanding our SKUs. So we'll be becoming a one-stop solution. Right now, the edge that we get, which shows in our volumes, is that we are prevalent in both primary and secondary market, both of them. So same dealer is the same customer for both the products. And when I'll have my primary material, secondary material, plus the 1500 SKU that I'm adding, I'll become a further one-stop solution for all the products. So these all things give us confidence in expanding, and plus even the export market has opted for a China Plus One model. So again, that all those things just add up and give us boost to add capacities.
Understood. And present margin for those future products which you wanted to increase, what is the ballpark range?
Can you please come back again?
So the galvanized products which you are going to use, including sheet and color-coated sheet, what could be the present, EBITDA per ton in those products, basically? Just wanted to understand the shift in the EBITDA per ton which can happen because of the introduction.
So they are to the tune of 9 to 11,000, and what we see right now, the margin profile on those items.
Understood, sir. Thank you, and that's all from my side. All the best for future.
Thank you, Vikas.
Thank you. We'll take the next question from the line of Angi Seth from RA Investments. Please go ahead.
Hello. Hi, can you hear me?
Yes, ma'am. Please proceed.
Yes. Hi. I first wanted to ask what the capacity utilization would be for the quarter.
So I think net, we are working on a capacity utilization of 65%, and that's the max that one can perform in this industry.
All right. And also wanted to know about the steel price. I believe there was some margin pressure because of the volatility in it. Do we see some stability in that for now?
Yes, in this quarter, we are expecting the steel price to be stable, and in fact, they're on an upward trajectory. So they're more over stable and going upwards.
Okay. And the last question is that we were given a target that should be like a 30% volume growth in the half of the financial year. So are we in line with that?
Ma'am, our performance for this quarter speaks for itself, and we are well in line for that.
All right. That should be it. Thank you.
Welcome.
Thank you. We'll take the next question from the line of Vikas Mistry from Moonshot Ventures. Please go ahead.
I have a couple of questions. Thanks for the opportunity. Sir, what gives you so much confidence that you are increasing your capacity by 4 times and you think that you will be utilizing 65% of that capacity and even with the margins should be as high as 7,500? This is in the context that every industry player is increasing their capacity by quite a much.
Hi, Vikas. I think I just answered this question, one previous question by Vikas, but to answer your question about the EBITDA per ton, as I am adding my KK products in the second million tons, which is just VAP of 11,000, 12,000 range, and if you just do simple maths of the entire VAP product of that, around 11,000 and the current levels of 5,000, the levels come much higher than 7,500. But still, I am maintaining a low ballpark figure of 7,500 rupees per EBITDA ton.
Okay. Sir, another question is that I am a bit perplexed that you announced a 1,300 crore capex 3 years before that, and we are already having land with us. So we think that capacity for DFT lines can be put in 18 to 20 months. So why we are so early for the capex?
If you can come back, if you can repeat your question, it was not clear to me.
Sir, actually, we already have increased our capacity from 6 million ton to 6,000 to 1 million ton. But now we announced a capex to 1 to 2 million ton. But DFT lines does not take more than 20 months to be deployed, and we already have land for that capacity expansion. So why we are so early in raising this 300 crore rupees?
No, I'm still not getting your question, but I'll answer it some way that, so basically from 1 million tons to, from 2 lakh tons of capacity to reach a capacity of 1 million tons, we took about 4 years from together. So we'll be doing this record-breaking expansion of 1 million tons in 2 years. And out of this, DFT would be coming this quarter itself as well, and next year, similarly, this time as well, the second leg of DFT. And there's not much DFT coming in the second part of the expansion, but yes, everything is well in line for that. There are a lot more products than DFT, which is coming in the second 1 million tons.
I think, Vikaji, you are mistaken. You mistook that the capacity from 1 million tons to 2 million tons will be solely DFT. That is not going to be DFT. That is going to be as what we said, certain forward backward integrations for enhancing our current productivity. And a part of it will be using DFT, but the entirety of that will not be DFT. You're right to say that a DFT can be deployed in 18 to 20 months. That's why by the end of this quarter we'll be starting to get our first DFT line, and that will be up and running by the end of first quarter of next year. So that's the target of that particular machinery.
Okay. Then. My last question is working capital cycle. If we are entering into value-added products, then by FY27, how much we could crash that capital cycle?
So if you see the trend of the company, so basically we've been expanding a dealer network, in which the debtor days are just to the tune of 7 to 8 days. Earlier, what the company was, JTL, was just one plant in Derabasi, which was solely serving the government sector, where the debtor days were a little higher. But now, as a mix of all 4 plants, and majority of produce being into the dealer network, more than 50%, our debtor days net average has come down significantly. So if you see the trend, we've already come down from 75 days of working capital to around 58, 56 already in the half yearly. And when you go down the line, and this is without credit financing, and when you go down the line, when I'm expanding my more network in the dealer network, I expect my working capital days to come down to the 40 days by the end of next financial year, and subsequently reducing them as and when as the years proceed.
That's great to hear. My last question is that what are the SKUs we are adding in value-added products, whether size of that will be how much, and whether they are rectangular or hollow section tubes, and can you explain a bit on that?
So I'm already in rectangular, hollow section, and the products that you mentioned. The products that I'm entering is color-coated segments, and I'll be adding pre-galvanized lines and from HR to CR process as well. So there will be ample number of SKUs. A detailed list of SKUs shall be out very soon, but to the tune of, the company shall be having SKUs to the tune of 4,000 post the entire expansion of FY27.
Thank you, and congrats for that heavy, massive capex announcement.
Thank you.
Thank you. We'll take the next question from the line of Mahek Talati from Yellow Jersey Investment Advisors. Please go ahead.
Hello.
So please proceed.
Hi. Hi. Thank you for the opportunity. Congratulations on a good set of numbers. So, couple of questions. So, if we see our EBITDA pattern trajectory, it has been on a downside for the last 2 to 3 quarters. And the new capacity which we are adding of the new 4 lakh tons, around 2 lakh tons is coming in the black pipe, which is a commodity segment. So, how will this help in further improvement of EBITDA pattern?
So out of the 4 lakh tons of capacity that we are adding this year and next year for the pipe itself, so out of the 2 lakh tons is DFT. So DFT is although black in nature, but commands a EBITDA per ton of around 9,000 levels. So that product produces solely included in VAP. To answer your question about my trajectory of EBITDA per ton going down every quarter, so if you look at the 9 months picture, as I mentioned earlier as well, it's well in line. Like last year, 9 months, my EBITDA per ton was 4,700 and this year it's 4,500. So as I'm expanding and reaching my produce of black pipes in the domestic market itself as well and gathering the market share. So this much of 200 rupees fluctuation is something the company can tolerate as well for a quarter, like for a growth period. The company's aim to increase the EBITDA per ton are well intact as whatever we are adding in the future is VAP. So a 200 rupees up down quarter doesn't really affect.
Understood. And is galvanized pipe a part of value added or a commodity product?
The value added product includes galvanized pipes. Anything above which is commanding a EBITDA per ton of around 7,000, 8,000 plus is the product which I include in my VAP KP. That's the difference. Okay. I don't include any product which is higher than the EBITDA of 5,000. Like any product which is higher than 5,000, I have ballparked the figure to 7,500. That's where I include the products in VAP.
Okay. And if you could provide a broad range of EBITDA per ton for our commodity as well as VAP, for our commodity and VAP products currently, like for the 9 months FY24, broader range, like where are we in terms of EBITDA per ton?
For the black pipe, the EBITDA per ton is around 2,000, 2,500 rupees range. And for the galvanized pipe, which is the VAP segment, it's around 7,500 rupees range. So the blended stands around 4,500, 4,600, whatever.
Okay. Thank you.
Thank you. Ladies and gentlemen, kindly limit your questions to 1 per participant. Should you have a follow-up question, please rejoin the queue. Thank you. We'll take the next question from the line of Anirudh Kekatpure from GM Financials. Please go ahead.
Hi, Pranav and Dhruv. Congratulations on a good set of numbers.
Excuse me, sir. I'm sorry to interrupt. Your voice is feeble. May we request you to use your handset?
Is this better?
Yes, sir. Please continue.
Hi, Pranav and Dhruv. Congratulations on a good set of numbers. Can you just, kind of help in terms of for 26 and 27, how will this capacity move from tentatively, from 1 to 2 million, and what will be the kind of capex which will be required for 26, 27? On an annual basis.
Hi, Anirudh. To answer your question, so it's very hard for us to tell in which quarter, which particular machinery would be coming.
No, not quarter, on an annual basis. On an annual basis.
Yeah, so on an annual basis, by FY25, we should be clocking, we should be reaching the capacity of 1 million tons plus.
Right.
Because now that we have announced second capex as well. So earlier the plan was the company shall be using around 250 to 300 crores by FY25 for the capex. But now the changes have changed and the scenario has changed, and the company should be having the capacity close to around 1 million plus 2 lakh tons, 3 lakh tons, and the entire capex for FY26 till FY26 should be around 455 crores. And the subsequent capex of around 650 to 600 crores would be happening in by FY27.
Okay. And how by 26, what will be the capacity from 1 million to where should it reach? What are the plans?
So in FY26, the capacity should be reaching around 1.4, 1.3 lakh tons. And like, it's again a very hard question for me to answer because the machinery can come well in before as well, because it's already being ordered and orders are being placed as well. So we're expecting the machinery should come early, but I'm just giving you a ballpark figure of 1.4 lakh tons.
So 1.3 on by 26. So by 27, from 1.3 it will move to 2?
Exactly, because it's a very phase-wise expansion which is happening. So I'm expected the machinery should be reaching my facility much before than that. But to give you a ballpark figure, 1.4 is an easy number to say that I'll be having on in FY26.
Okay, and where, largely which plant? Everything will be at Mangaon?
Yeah, everything will be happening at Mangaon. Only the expansion from this particular capex which is going on for reaching a capacity of 1 million tons, 2 lakh tons is going in Raipur. Other than that, my entire capacity addition is happening in Mangaon. So solely Mangaon would be a capacity of 1.4 million tons down the line.
Got it. So 1.4 will be at Mangaon, rest, okay.
The major benefit that I get from Mangaon is that I'm just next to JSW Dolvi, which is my main raw material supplier. So anything close to my raw material supplier gives a lot of benefit. Also, I'm in close proximity to Nhava Sheva port, from where I can at times for better pricing import raw material as well, my coils, for exporting for and same can be done for the export as well.
And what would be the peak capacity at Raipur if 1.4 will be at Mangaon then?
Raipur capacity would be total of 3 lakh tons down the line.
Okay. Got it.
This is only for pipes. Apart from that, obviously, we have a capacity for coils as well over there.
Got it. Okay. For rest, I'll kind of connect with you separately. Thanks a lot.
Sure. Pleasure.
Thank you. The next question is from the line of Prathamesh Devar from Tiger Assets. Please go ahead.
Yeah, hi, I'm audible.
Yes, sir, please proceed.
Yeah. Sir, just wanted to know that you have given guidance of 7,500 EBITDA per ton. At what time this you will achieve this 7,500?
Can you please come back again?
I think you have given guidance of 7,500 EBITDA per ton. So just wanted to know by when you will reach this EBITDA per ton.
So in FY28, I should be crossing 7,000 mark, and subsequently I should be reaching 7,100 mark by the later quarters of FY28 itself. So to begin the year of FY28, I should be in this range, but I shall be definitely ending my year with this range of 7,100 rupees.
Okay. Now, just wanted to know about the industry. What's the current demand? Like, how many million tons are needed for the year?
So the ERW pipe segment itself is around 13-14 million tons, and which is growing at a rapid rate of around 12-13% every year. So that's the market demand we can talk about. And other than that, you know how the government is pushing its capital towards Jal Jeevan Mission and infra projects and railway stations and airports. So all these are our target customers and where our pipes will be used. So this is a 2047, as you know, India is a growing economy. So it's we are very glad to be part of the growing economy story and serving the demand as well.
Okay. I think you have told 13 to 14 million, right?
Sorry?
For the industry, you have told 13 to 14 million, right, for the year?
Yes. It's, which is growing. So 14 million was the size previous year, and it is growing at a rate of 12-13% every year.
Okay. And so where we stand at the market share? How much market share do we have currently, and going forward, how much it will be?
So we are close to around 9% market share right now, and going down the line, we should be capturing more than 20% market share.
20%. By when, sir? Are you looking for the 20%?
So we should be doubling up our market share as we double our capacity, which will happen in the year of 2 years, and after that, by FY25 we should be around 15-16%, and subsequently by FY28 we should be around 25% market share.
Okay. Got it. And so for coming quarter, any guidance for the realization pattern?
Again, I can give a guidance for my sales tonnage, which would be similar to what I've clocked this quarter itself. But average realization is totally dependent on HSE prices. I really can't comment on that.
Right. Okay. Got it, sir. Thank you. That's it from my side.
Pleasure.
Thank you. The next question is from the line of Arpit Shah from Stallion Asset Management. Please go ahead.
Hello.
So please proceed. Yes.
Yeah. Hi, Dhruv. Hi, Pranav. Just wanted to understand whether a Raipur facility is a primary facility or a secondary facility, or is it a mix of two?
So all our facilities are fungible. They can either be primary or secondary, both. But to talk about the Raipur facility, as we are one step backward integrated over there, we procure billets and roll our own narrow width coils over there. So it is a secondary facility.
Got it.
Currently it is a secondary facility, but going forward, when we are increasing our capacities at Raipur plant, we'll be bringing in the DFT at the Raipur plant as well. So, with the onset of DFT and certain higher dia pipes, so we'll be producing those sections in a primary produce market as well.
Got it. So can you help me with the volumes at Raipur facility this quarter?
This quarter. Can you please come back again?
The Raipur facility volumes this quarter?
I'll have to check the exact number, but they should be the tune of 65% same. It's standard across all the 4 plants.
So that number would be what, 25,000 tons this quarter? How would that number look like?
No, that would be the tune of 15 to 18,000 tons. 15
to 18,000 tons. Okay, got it.
Yes.
And just wanted to understand, since we have about 600,000 tons capacity, and we're almost speaking at, let's say, 100,000 capacity on a quarterly basis. So would DFT change that peak capacity utilization from, let's say, from 65% to 80%?
We should be clocking from 65 to 75. That's the max one can do, but I rather like to give a target of 65 because in that 65 as well, we are well in line to double the volume from 4 times the volume of what we're doing right now.
Got it. And do you have, by any chance, do you have the mix of the primary and the secondary you did this quarter?
In this, the secondary would be slightly higher than primary.
But what the YY volumes for, let's say, primary and secondary, let's say primary, would primary be flat, or would primary also see some growth YY basis?
Can you please come back again? You're not really clear.
Yeah, would primary have growth on a YY basis?
Yeah, the primary was more stagnant on YOY, and the increase happened majorly in secondary.
Got it. Thank you so much.
Thank you. We'll take the next question from the line of Harsh Vasa from SBI Capital Securities. Please go ahead.
Yeah, hi. Am I audible?
Yes.
Yes, sir.
Yeah. So good afternoon, Pranav sir and Dhruv sir. And thank you for the opportunity. So my first question was that, we have been guided for 40% of validated products for FY24, but as of now, 9 months, we've reached at 30%. So what kind of validated product sales volume do we expect for Q4? Will it be equal to commercial and validated, will be in the range of 50-50 or something?
So, hi Ash, hope you're doing well. And so we should be reaching the previous VAP maximum. So our highest VAP produce was around 29,000 mark, I think, in quarter 2, or I think in quarter 1. I'm not really sure, but we should be crossing that figure in this quarter. That's what the company's goal is, as the maintenance is also over now. And if we reach that, so we should be somewhere in the range of 35-36% of the total VAP share. Not exactly 40%, but yeah, close to 40%, around 36-35%.
Okay, thank you. And if I could just squeeze in one more question. Actually, I just missed out on CAPEX. What was the CAPEX which you had guided for FY25, 26 and 27?
I'm So the capex for those years, so it's going to happen in a yearly phased manner, quarterly based manner. So the exact picture is very difficult to say, but to answer your question, by FY27, everything should be installed with a gross block of around 12,000 crores. And on that, we should be clocking a top line of 10,000 crores.
Okay. Thank you. And all the best.
Thank you.
Thank you. We'll take the next question from the line of Darshil Pandya from Fintrust Capital. Please go ahead.
Hello, sir. Thank you. My question is already answered. Thank you.
Thank you. We'll take the next question from the line of Onkar Gukardare from Shree Investments. Please go ahead.
So this 10,000 crore top line you are saying is after considering the 65% of 2 million ton, right?
Yes.
Okay. Another thing is that what kind of ROC and ROE you will be targeting, since you are currently doing upwards of 30%, what kind of targets you have after 3-4 years, after assuming all this capacity expansion?
So exact calculations are not out because it's really hard for me to pinpoint as and when the capacity is added every quarter. But what brief calculations that we have done right now, so all of them should be to the 27 to 32%.
Yeah, so somewhere in the 30% kind of range you are expecting, right?
Exactly.
Which is currently what it is, right? 30%.
Exactly.
Okay. Another question is that it would be interesting to know from the promoters so that the conversion of warrants you are doing at around 270 rupees per share, and by the time you announced the share price was around 13-14% less. So I mean, what gives promoter the confidence to pump more money at a higher valuation?
So actually, to answer your question, it was much higher than 12-13%. The floor price that was set that time was 210 rupees. But the promoters are looking at the 3-year forward valuation of the company and with the same ratios, and we put the money on that. So that's what the promoters were confident about, and that's why the 60 rupees premium was happily given by the promoters.
Okay, so the promoters basically expect the valuation of company at that time. They thought that it was cheaper, and the valuation should have been higher, right? As per the
it's the forward. I put the money at the forward valuation, not at the current valuation. It's the forward valuation calculation that I've done and put money according to that.
Okay. All right. And just one thing is that what kind of equity dilution that 1 million to 2 million capacity will happen at that time? What kind of equity dilution will take place?
I'll have to see that. I haven't really calculated those things.
Okay, all right. Any ballpark number you have?
Atulji, anything? I think there are around 17 crore shares of the company right now, and going down the line, 3 crore shares are being added. So I really don't know how to calculate this myself, so I'll probably ask my team to calculate and probably revert to you.
Okay, all right, no problem. Thank you.
Thank you. The next question is from the line of Rahil Shah from Crown Capital. Please go ahead. Mr. Shah, I have unmuted you. Yes, sir. Please proceed.
Yes. Hi, sir. Good evening. So you mentioned you will be functioning at the new capacity of 1 million tons in FY25, or you will be reaching at that capacity at some point in FY25? Just for clarification.
I'll be reaching the capacity mark of FY25, and although the second expansion is also undergone and happening at the same time as well, so the capacity would be standing maybe a little slightly higher than that, but the volume should be well in line of around 60% to 1.2 million tons.
So that is end of FY25 or during, like the course of FY25? During. Okay. And it's so fair to say you'll be...
So I'll be actually doing a 35% growth in the next year itself as well. If you look at the...
Yeah, that's what I was getting at. Okay. And any outlook on the margins as well? Will they again stay in the same region, or you see some expansion there?
As DFT is coming and solely VAP, so my margins shall be expanding.
Any general number? One can.
Very hard for me to say a number right now. Once the DFT is in my place and I see how it's working, I'll be in a better picture to give the exact number.
But surely an increment over there.
Surely an increment. You should expect, to be honest, 15% increment. 15%. 15%.
Okay. Got it. All right. Thank you and all the best.
Thank you.
Thank you. The next question is from the line of CA Garvit Goel from Invest Analytics. Please go ahead.
Hi. Thanks for the follow-up. Just to get the visibility on revenues, can you share any ballpark number for FY25 and FY26 for top line?
I can tell you for the volumes, top line again, it's not in my hand. It's totally in HRC relation. So, but the volumes would be again 35-40% growth in FY25.
Okay. And for FY26, any visibility?
Again, a 35-40% growth.
Okay. For next 2 to 3 years, we are going to witness a decent growth, that means, right?
No, in FY28, I'll grow to the 40%, 45%.
Okay, understood, sir. That's it from my side. Thank you.
Thank you. The next question is from the line of Smith Joshi, an individual investor. Please go ahead.
Can you hear me?
Yes, sir. Please proceed.
Okay, thank you. First of all, congratulations to the management for the great set of numbers. And my question is, are we working in the research and development, creating any new product portfolio for our future growth in upcoming 3 to 4 years?
So I think I've been repeating this several times in the call that my entire expansion, what I'm doing is just expanding my product. I'm not expanding my current product. I'm expanding my SKUs of products. So from 1,000 SKUs, I'll be reaching 4,000 SKUs by FY28. So the whole scenario is just expanding products.
Okay, that's actually great to hear that. Thank you so much. That's it.
Thank you. The next question is from the line of Onkar Gugardare from Shree Investments. Please go ahead.
Yeah, thanks for the follow-up. Just wanted to confirm whether from 1 million to 2 million capacity expansion, in that entire thing will be value-added product, which will be around 11 to 12,000 rupees per ton, right?
9 to 11,000.
Okay, 9 to 11,000. Entire thing will be value-added products.
Yes.
Okay, and from current FY24 3.3 to 3.4 million tons, so you would be doing in next 4 years by FY28, that means around upwards of 13 lakh ton, right? So that is around 4 times the current FY24, right?
Yes.
So this is bare minimum 65% capacity utilization you are talking about, or like you can go higher also?
Yeah, it's a safe number for me to say.
Okay, all right. Thank you very much.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to the management for the closing remarks. Over to you, sir.
Thanks, Mama. Thanks, everybody, for coming and joining us for the conference call of the company for Q3. I would like to express my sincere appreciation to all the shareholders, employees, customers, and partners. Your trust and dedication have been instrumental in our journey so far, and we are excited to embark on the road ahead together. Thank you, everybody.
Thank you, members of the management. Ladies and gentlemen, on behalf of Nuvama Institutional Equities, that concludes this conference. We thank you for joining us, and you may now disconnect your lines. Thank you.